All right, it looks like we've reached critical mass, so we are going to go ahead and get started. Thank you to everyone for joining here today for our sort of impromptu emergency town hall, where we'll be discussing the SAVE plan and specifically implications for those of you that may be pursuing public service loan forgiveness or PSLF. And the potential delays that are being caused by either remaining in the SAVE plan or by some of the application backlogs that we're seeing right now from the Department of Ed. So we're going to go ahead and get started. As always, a few housekeeping notes before we do. First off, this workshop is being recorded and everyone will receive a copy of that recording following today's session. So if you have to step away or lose track of what's going on at any point in time, not to worry. Again, everyone will receive a copy of today's recording. That said, if you do have any questions, please feel free to put those in the Q&A. As you might be able to see from the fellow panelists on today's session, I am joined by a strong squad of our customer support experts. Some of you may even be familiar with this incredible team and work with him already, Dylan, Rafa, Matt, and Kyle, and they are here to assist and help you throughout the session. And if you need to enable closed captioning or live transcription during the webinar, we'll be posting a link in the chat with instructions on how to enable this feature on Zoom. All right, so as always, we're going to start with some very brief introductions, and then we are going to dive right in to our latest policy updates. And again, today's session really focuses on what's happening with the SAVE plan, what are the other options outside of the SAVE plan as far as income-driven repayment goes, and what are the implications for public service loan forgiveness. We're going to talk a lot about PSLF buyback. This has been a huge topic that many of you I know are curious and interested to learn more about. So we're going to walk through that. And then we're going to show you exactly what you need to do next, especially if you are trying to pursue PSLF, how you need to be positioning yourself, whether you're on SAVE or not, in order to ensure that you do not experience delays in crossing that forgiveness finish line. So we'll show you all of those things in just a bit. I also want to point out that following today's town hall, I am hosting a office hours session exclusively for Savi Premium members, so those who are enrolled in either Essential or Pro. This is going to start at 5 p.m. on a separate link. If you are a Premium Savi user already and would like to join me for those office hours where you and I will get to interact with some of our fellow borrowers, but really I'll be answering any and all questions, sort of an ask me anything type of session. Please feel free to reach out in the Q&A and let our team know that you'd like to request the link. They'll just need to confirm that you're a premium member and then they will share that with you. So again, I am hosting an office hour session starting after today's town hall at 5 p.m. on a separate link. This is for premium members only, those who have Essential or Pro. All right, so brief introductions. My name is Lindsay Clark. I'm the Chief Borrower Advocate here at Savi, and I lead a lot of our policy and educational communications around student loans. I'm a student loan borrower myself. I have a little over $200,000 in student loan debt. I say that because it might make some of you feel better about your own situations, but really because it impacts the way that I communicate about this topic. I know firsthand how overwhelming and confusing it can be. I wasn't always a student loan expert, but I have been working with Savi since the very beginning in 2018, traveling the country and giving workshops in person and virtually to hundreds of thousands of borrowers across the country, trying to help them understand and navigate these programs. So I'm excited to be able to be here today and talk about SAVE and PSLF because I know so many of you are sort of in this situation and not sure what to do. So my goal is to really have everyone feel like they are leaving here better than when they arrived. Now, I work for a company called Savi, and Savi is your exclusive student loan benefits provider. We are a social impact technology startup based in Washington, D.C. We were founded by student loan experts and advocates who've been fighting on behalf of the borrower for more than a decade. And they realized how difficult it was for many of us to navigate these programs on our own. So they decided to do something about it. And we developed Savi as a technology platform, kind of like a TurboTax for your student loans, and a human service, because we realized how valuable talking one-on-one with an expert really was when it comes to student loan debt. To help borrowers like you and me not only better understand our student loans, but to navigate successfully from start to finish. But along the way, our goal is to make the experience of being a student loan borrower a better one, because I think we can all agree it is not great. So we try to do that by identifying as much additional savings as possible on a month-to-month basis through things like income-driven repayment plans. But we also do it by making you, the borrower, our top priority, not your student loan debt. There are plenty of entities in this space who are out there to service your debt, make money off of your debt. Their interests start and end with your debt, not you, the borrower. And that's where we come in. We are your support and your advocate to ensure that your needs are being met and that you achieve the best outcome possible. Which brings us to why we're all here today. Savi partners with over 400 different kinds of institutions across the country, from employers, financial institutions, membership organizations, unions, you name it. And we provide our services as an exclusive student loan benefit to members of that community. So not just anyone can get access to Savi. It is only provided through these partnerships because we truly feel that having a trusted messenger like your employer or your union or your membership association is the best way to provide expert and trusted information and reach borrowers where they are. And that's why we do it the way we do. The other great thing about Savi is that it's set up to not only benefit you, the member or employee, but any of your family members as well. So I'll show you a little bit later on in the presentation, but right from your Savi account on your dashboard, on the left-hand side, you can click Invite Friends or Family, and you can enter in the email addresses of anyone in your friend circle or family that you'd like to invite to take advantage of Savi, and they will receive an email to create their Savi account. The other benefit of that is it also allows you to get a 50% off coupon on any of our premium plans if you invite 3 or more family members. So just want to make sure everyone is aware of that because, again, our goal is to help the broader community of student loan borrowers, and we're excited to be able to be here tonight to do so. All right, so with introductions out of the way, we are going to dive right in, and these are the latest updates as of today, September 24th. And again, we're not going to cover all of the major policy updates, things like the OBBB, etc. Today's session is really going to focus on the SAVE plan, what's happening with the SAVE plan. It's going to focus on, what's happening with other income-driven repayment plans. And the application backlogs and processing and wait times that are delaying those. And what that means for people pursuing public service loan forgiveness. We work with a majority of PSLF eligible borrowers. So I'm going to help guide you through what steps and how you should think about this based on what situation you might be in. And I'm going to outline exactly what you need to do in order to take action right away. All right, so first up, let's talk about what's happening with the SAVE plan. So just as a refresher, the SAVE plan is an income-driven repayment plan that was introduced under the Biden administration, and it was the most affordable income-driven repayment plan to date. It basically cut payments in half for most borrowers. It was great until lawsuits came through last summer, and a court injunction essentially put the plan on hold, or I should say it forced the Department of Education and the Biden administration to put the plan on hold. So as a result, last July 2024, all borrowers enrolled in the SAVE plan were placed in an automatic forbearance, or what's called a general forbearance. if you were on the SAVE plan, you did not opt into this, you did not do anything or take any action on your own. This was done to your account automatically. You didn't have a choice in the matter. And that's because the Department of Education could not legally process payments on that plan until there was some resolution with the litigation. So borrowers remained on that forbearance, for the foreseeable future, again, until there was some resolution. So under this forbearance that started last July 2024, borrowers did not have to make monthly payments. Okay, so they would have seen a $0 monthly payment, and interest was not accruing. However, that changed recently when the Department of Education announced this summer that interest did resume or was going to resume starting August 1 of this year. So July of 2024, last year, borrowers in SAVE were placed into that general forbearance with $0 payments and no interest. Fast forward to now, okay, that general forbearance, as far as no payments remains. However, interest has started to accrue again as of August 1st of this month, or last month, I should say. All right, so that's sort of where anyone who might be in the SAVE plan currently resides, right? They're still on that forbearance, but interest has started to accrue. But here's the big kicker and why we're really here today. The time spent during these months in general forbearance for those on the SAVE plan do not count as qualifying credit towards public service loan forgiveness. Okay, so unlike the COVID pandemic payment pause, right, which many of you might remember started in March of 2020 and lasted well over 3+ years, right, where borrowers were placed automatically into a forbearance with no payments and no interest, that period of time does count, okay, but this is different. This period of time does not count. This SAVE forbearance time does not count, okay? So long and short of it is there are currently only two ways in which someone enrolled in the SAVE plan right now could start to receive PSLF credit. One is they could enroll or switch into a different IDR plan. Pay, ICR, or IBR are all available for borrowers to enroll. And the goal there would be enrolling in that plan to resume making qualifying monthly payments for PSLF, okay? Because even if you are on the SAVE plan right now and you made, let's say, ad hoc voluntary payments each month towards your balance, that still would not count. They cannot process them as a qualifying payment as a result of this litigation. So don't even bother trying to make a voluntary payment thinking that that will suffice or that will be able to get you credit. It will unfortunately not. All right, so the one option is moving out of the SAVE plan onto another income-driven repayment plan, and there are 3 available, which we'll talk about in just a second, and after which you can resume making those qualifying payments towards PSLF, okay? Or you can pursue something called PSLF buyback, where you are essentially buying back months of PSLF credit for time spent in the SAVE forbearance. This is done by submitting a formal PSLF buyback request via studentaid.gov, okay? But one of the stipulations here is that in order to be eligible to receive a buyback, okay, or have your request approved, you must have 120 months of certified PSLF employment to be eligible. Okay, now that doesn't mean 120 qualifying payments. That means 120 months of certified employment. And we'll come back to that a little bit later on when we talk about next steps, because what it means for most, if not all of you, is that you need to make sure that your PSLF employment certification forms, that critical one and only form for the program, is current and up to date. Especially if you have not submitted any of those forms ever. But if you have not submitted one, I would say in the last year at minimum, but I'm seeing borrowers do it more frequently than that. We're encouraging almost 6 months or 12 months. But it is best to make sure, especially if you think you're close to that 120, that you submit an ECF for your current employer so that you can bring your employment certification That is, again, the months in which you worked for a qualifying employer, current. Okay, and we'll talk about some of the implications of that in just a bit. All right. Now, as far as the other IDR plans go, so the non-save plans, PAY, which stands for Pay As You Earn, ICR, which stands for Income Contingent Repayment, and IBR, which stands for Income-Based Repayment. These are all currently available for eligible borrowers to enroll. Now, it's unlikely that the payment amount will be as low as you might have been paying on the SAVE plan. And obviously, it's going to be higher than the $0 forbearance that you've been on since last July. All right. But through your Savi account, you're able to see what those potential options are. Okay. However, here's the other kicker when it comes to switching or enrolling into another IDR plan, because of course, nothing can be too easy here. There is a massive application backlog as a result of the pause in processing that occurred earlier this year. So to back up and give some context, at the beginning of 2025 in January, the Department of Education paused processing IDR applications. Okay. And they only resumed processing those applications in May of this year. Okay. So what that meant was, there's a huge backlog that has accumulated over these past months. And just to give you a sense of how big it is, only 3.84% of all IDR applications submitted in 2025 have been processed. Okay. And as it stands now, as of data that was released by the Department of Education on the August processing rates, the backlog stands at a little over 1 million applications still. Okay. So what that means is if you've submitted an IDR application recently, whether it's to enroll for the first time, switch into a different plan, recertify, you should be prepared to wait longer than normal to receive your results. Now, as a result of the backlog, okay, your servicer may place you into a 60-day processing forbearance. Now, this is different than a general forbearance. This processing forbearance is designed to allow time for the servicers to process your application, 60 days to be specific, and during which no payment is due. Okay. One positive about the processing forbearance is that those 2 months or 60 days actually do count as qualifying PSLF credit. All right. So if you were enrolled in the SAVE plan right now, okay, and you have not been accumulating qualifying PSLF credit, and let's say you submitted an application to switch into the pay plan, and upon receiving your application, your servicer puts you instantly into a processing forbearance, which that's generally how it happens. Upon receiving the application from you, the servicer will automatically put you into that processing forbearance for those 60 days to allow them time to process. So if you see a $0 payment due the next month or something indicating, something like that, that is normal. That's part of this processing forbearance and to be expected. But all to say, it would mean that you would have 2 months of qualifying PSLF credit without having to make a payment yet. Okay, so something to keep in mind, as if this wasn't complicated enough. All right. But again, just want to make sure everyone is aware there are major application delays, especially when it comes to income-driven repayment, and even more so when it comes to PSLF buyback applications and requests, which we'll talk about in just a bit. Okay, so we've talked a little bit about the options of enrolling in another income-driven repayment plan to start making payments and making qualifying payments towards that 120 with PSLF. Now let's talk about PSLF buyback, what it is, who's eligible, how it works, etc. So this was a new option launched in 2024 that essentially allows borrowers to retroactively count certain past periods towards PSLF. And it was really designed to help those who had made payments under the wrong repayment plan. Okay, so let's say you weren't on an income-driven repayment plan for a while and didn't realize that those payments didn't count, right? So it's designed to help those folks, maybe those who paid more than required. And last but not least, those who were in deferment or forbearance, okay? And that's where the SAVE forbearance comes into play, all right? Now, who is eligible? First, you have to have direct loans to be eligible, okay? You must be employed full-time with a qualifying PSLF employer during the buyback period, okay? So even though you have reached 120 months of certified qualifying employment, you must remain employed while your PSLF buyback application is being reviewed. And you cannot already have received credit for those months under IDR or PSLF counts, okay? Now, what periods can be bought back? So, months where payments were made but did not count towards PSLF because the loan was in the wrong repayment plan, payment was too early, late, or short, or overpayment situations. So, for example, you made a lump sum payment that was applied incorrectly. Usually with those lump sum payments are supposed to be submitted with, explicit directions that they be applied evenly to cover 12 months worth of income-driven repayment, payments made over that course of time. And oftentimes, unfortunately, they're applied incorrectly and borrowers end up losing out on receiving those credits, okay? So you can buy back months that maybe you did make a payment, but it wasn't in the right plan and therefore it wasn't qualifying, right? Or certain deferment or forbearance months, like the SAVE forbearance, that do not qualify. So how does it work? Borrowers request a buyback review from the Department of Education. The Department of Education essentially calculates the amount owed to buy credit for those months, okay? So for example, if you were on the SAVE plan and that SAVE forbearance, right? When you are trying to buy back however many of the months that you've been in that SAVE forbearance, maybe it's just 2, maybe it is, the whole time, 12 plus months, you would be paying for each month what you would have or what you were supposed to have paid under the SAVE plan, okay? Now, I will say this, because the SAVE plan is still technically not allowed to be processed, it's still on hold, what we are seeing as far as the amount that borrowers are being asked to pay as far as that buyback goes, if they were on the SAVE forbearance, is the amount they would have paid under the repay plan. Now, this is getting into the weeds a little bit, but the repay plan was the income-driven repayment plan before SAVE. Repay essentially became the new SAVE plan, and any and all borrowers that were on repay were automatically enrolled into SAVE, okay? So if you are in the process of pursuing PSLF buyback and you receive an update and it mentions repay, right, and a payment amount at the repay plan, that's why. They just are legally not able to process a payment under the SAVE plan, and so therefore they're processing it under the repay amount. It should come out close to, if not equal to what you were paying on SAVE, although it may be slightly different, and that's why, okay? Now, the borrowers then pay that buyback amount, and once paid, those months are credited towards PSLF progress. You've essentially bought them back, okay? So if I wanted to buy back 3 months, I needed 3 more credits until I reached that 120, and I've been on the SAVE plan, and I, on the SAVE plan, was supposed to be paying $10 a month, okay? And I, on repay, am also going to be paying $10 a month. I would pay $10 for each of those months, right? 3 in total, so 10, 10, 10, $30 total to buy back those months of credit, okay? Now, why consider the buyback option? Well, first, it can help you reach those 120 qualifying PSLF payments faster, okay? By, again, going back and receiving credit for periods in which you were working and employed by a qualifying employer, but did not receive qualifying credit. It's also going to help recover months that otherwise wouldn't have counted, okay? Sort of lost months, if you will. And most importantly, it can reduce the risk of needing extra years in repayment. I'm sure most of you would agree that no one wants to continue paying on their student loans when they've reached the 120th qualifying month in payment, right? That's a sort of a tough pill to swallow, especially when we're not seeing refunds processed quite as quickly, if at all, these days. So all to say, borrowers are very aware of the fact that once they've reached that 120, they do not want to pay a dime more, and they really shouldn't. When it comes to PSLF buyback, borrowers, rather than, let's say you're on the Save forbearance and you are 5 credits away, 5 payments away from that finish line, rather than switch plans and have to make 5 more monthly payments that could be more expensive, right, by switching into another income-driven plan, although that is an option, they want to utilize PSLF buyback to purchase back months that should have counted, whether it's Save forbearance or otherwise, towards that 120, all right, while they can remain in the Save forbearance for the time being. So some of the steps that borrowers can take now. First, confirming your employment eligibility for past periods. And there is only one way to do that, and that is by submitting your PSLF employment certification forms for any and all employers, current and previous, okay? Remember, PSLF is retroactive, going back to October 2007. Why October 2007? Well, that's when the program was signed into law. So any qualifying employment that you've had from October 2007 to present day is fair game, even if you're just finding out about the program now. However, keep in mind, let's say you've had several employers over the course of that time that are all qualifying. You will need to get an employment certification form signed off from each of those employers. So that could end up, adding up as far as the number of forms that you're going to need to get signed and into the Department of Ed if you have not submitted these already. All right. If you have been keeping up with your employment certification, but you have not certified in the last year, you absolutely should submit another employment certification form for your current employer. Again, you want to have your employment certification as close to current and present day, all right, September 24th, as possible. And your employment will be certified through the date on which the employer signs off. Okay, that's the date through which your employment will be certified at that institution. And there's nothing stopping you from submitting an employment certification form every other month, every month. I've been seeing borrowers do this again, especially those that are close to that 120, to ensure that they are getting that employment certified as they inch closer and closer. Okay. And if you are at that 120, okay, as far as certified employment, and the only determinant of that will be your studentaid.gov account, that account has to reflect 120 months of certified employment. You can submit that PSLF buyback request at studentaid.gov. We're going to be sharing a help center link that has detailed instructions on how to do that. And then that will process by the Department of Education, at which point you will review the buyback cost estimate and decide if it's worth it or you're able to proceed. Now, one thing on PSLF buyback, similar to the switching or enrolling into a different IDR, PSLF buyback is also experiencing a major application backlog. Just in the last couple of months, the number of buyback requests that have been submitted has skyrocketed. So just to give you a sense, the Department of Ed has only processed about 4,000 to 6,000 buyback requests a month since about May of this year. And each month, the backlog continues to grow. It's well over 75,000, I believe, applications at this point. Meaning, there are some borrowers who have been waiting since last year, last November specifically, for their buyback to be processed, okay? And that simply because of the backlogs that are happening and the fact that more and more people are pursuing PSLF buyback. So if you are deciding on what to do, you should be aware that the PSLF buyback route is probably a longer backlog, substantially longer than IDR applications right now. Okay. Now, maybe while you're on the save forbearance and you don't have to be making payments right now, you can bide your time, right? And hope that that will get processed sooner rather than later. But we have borrowers who have been waiting upwards of a year for their buyback request to be processed. Okay. So this all factors into the decisions, right? If you are perhaps in a rush to get to that 120, let's say you have retirement on the line, and you are 2 credits away, it may be worthwhile, if you are financially able to switch into a different plan, make 2 payments, or get 2 months of processing forbearance and be done, rather than wait for PSLF buyback, which could take upwards of a year, during which you'd need to remain employed, right? So these are some of the considerations that go into that decision making, and all of that really comes down to you as a personal, your sort of personal situation as a borrower. So really quickly, I wanted to just run through how to apply for public service loan forgiveness with these employment certification forms. For those that may not be familiar and need a quick refresher, all right, the employment certification form is the one and only form for PSLF. It gets signed off by you, and it gets signed off by your employer, any current or previous employers you may have had, and then that gets submitted to the Department of Education. They review that and award you qualifying payment credits and employment certification, okay? And you need 120 total of employment certified months and qualifying payment months, okay? Now, it is very normal for many people to be at 120 months of certified employment, right? Meaning they've been working in a qualifying public service capacity for that amount of time. However, they only have 100 qualifying payments, okay? And so it's essentially figuring out that difference, right? Why did those payments not count, or why did those months not count? Do they need to make more payments in order for them to count, or could they qualify for public service loan forgiveness buyback, right? That's where the real question comes in, okay? So again, I really want to emphasize this ECF form only because regardless of whether you're going to decide to switch into a different plan or pursue PSLF buyback, it's likely going to be the case that you need to submit your ECF for your current employer, again, to ensure that your employment is certified up through September, right? Most of you may not have submitted this past month. Maybe you submitted it earlier this year, if at all. Again, this is one of those situations where normally we'd say, at a minimum, once a year is fine, or every 12 months, if that. But with this PSLF buyback in place, and the backlog of processing applications across the board, we are, encouraging borrowers to submit frequently, and especially right now, if you are trying to pursue that PSLF buyback, or even if you're trying to switch into a different plan. Again, making sure that your employment certification count is as up to date as possible. So this is the PSLF employment certification form, or ECF, right? Where you certify that qualifying employment. You sign off on the top, your employer signs off on the second page, certifying they are an eligible employer, the dates you work there or currently work, whether you're full-time, part-time, and whether you're 30 hours or more on average, okay? And one of the things I just want to point out is with a Savi premium membership, we do all of that legwork and paperwork for you. So when it comes to submitting an ECF each month, it is literally as easy as a click of a button, upon which it goes directly to your employer that we work with. They sign off within or less than 24 hours, and it gets submitted to the Department of Ed instantly and error-free. So just to clarify, what the employee fills out, that's you, basic information, name, social, date of birth, contact. You'll also fill out your employment information, so your company name and start and end dates, and you'll sign and date. And then what your employer fills out is their federal employment identification number, or EIN, address, website, and then HR information for the person who is signing off on the form. Usually it is someone in HR, who is authorized to access payroll records, et cetera, in order to be able to attest to the dates that you work there and the hours. However, it does not necessarily need to be. For those of you here today whose employers provide Savi as a benefit, we work with your employer HR and everything is already set up within our Savi system. So it goes directly to the right person who's sort of able to track it and be aware of what's coming, sign off instantly, like I said, and get that submitted. One of the reasons why submitting through Savi makes it a little bit easier, especially for those who might have to track down previous employers from years ago. They don't know anyone who still works there. Maybe the employer has closed. They're not able to get a response back, things like that, is because accuracy and speed matter more than ever right now. You want to avoid costly mistakes that could delay your PSLF progress, all right? And these ECF forms get denied for the smallest of errors. And when you submit an ECF form, let's say you do it on your own, and you submit that form and you don't hear back for a couple of months, okay? A couple months go by and you hear back from the Department of Education that the form has been rejected because there is a wrong or missing EIN number. Well, now you've wasted a couple of months waiting on that processing, only to find out that the form was filled out incorrectly, potentially by your HR or employer, and you had no idea. And now you've got to go and resubmit again, and then wait even more time for that to process. So the goal here is to make sure that the forms being submitted are 100% accurate, okay, based on employer eligibility, employee eligibility, all of the above. But like I said, even the smallest clerical errors will get these forms rejected. So missing or invalid employer signature, if the signature is typed and not traced or drawn. Employment dates that don't match payroll records, right? You can see some of the rejections here as far as percentages go. But, again, the main point is that mistakes can delay processing for months and push your forgiveness timeline back. And that's why with Savi, we've designed it so that it is completely free of human error. And we actually have a 99% acceptance rate on all of our applications. The other aspect here is that we work directly with all of your employers. So that way you don't have to know or look up who this form needs to go to. We work directly with your current and previous employers to make sure those forms get sent to the correct contact for the fastest possible processing, okay? Oftentimes borrowers who will attempt this on their own and trying to track down someone at a former employer to sign off on this form struggle because they don't hear back. They send out emails into the void and they never get that form signed off. With Savi, that's not the case, mostly because we do the follow-up for you. So if there's an instance where we've sent something out to a former employer that isn't responsive, we monitor those applications, and once it hits a certain time threshold, we're following up with a different contact. So we're making sure, as your advocate, that we get those forms signed off as quickly as possible. And then once we've submitted and reviewed everything, and it gets submitted directly to the Department of Ed, no faxing needed on your part. We monitor all of that progress with you right from your Savi dashboard. So why submit ECFs now? Well, again, in case it wasn't apparent already, you would want to make sure that your studentaid.gov account, which is where your PSLF credit tracking takes place, is as current as possible, especially if you are trying to pursue PSLF buyback, if you are trying to decide whether or not you should switch into a different repayment plan or stick around on Save. You'll want to know exactly where you are on the path to that 120, okay? Because being 50 credits in, right, out of the 120 versus 118 credits in makes a big difference, right? Okay, maybe I'm 2 credits away, okay? I would really like that to come as fast as possible. Maybe I'm willing to make 2 months of payments and switch into another plan so that I can get this over and done with. Versus if you are at 50 credits towards the 120, right? You've got a long way to go. And so that might be a different kind of conversation that you have with yourself about, okay, what does this look like? Maybe I do want to stick around on Save or pursue the buyback when I get the chance at 120. But for now, I'm going to have to get used to starting to make payments again. So all of that totally depends on having that employment certified up through September or as current as possible. So you also want to do this now because of potential policy changes that might be coming down the pipeline with regards to PSLF. We've talked about in previous town halls that the Trump administration and Department of Education are pursuing rulemaking around limiting the eligibility of certain employers they deem to be performing substantial illegal activities or purposes. And we are awaiting the final rules from the Department of Ed, which should be published by November 1st to take effect July 1, that could potentially limit or ban certain employers from being eligible for PSLF. What that would mean is that all of their employees would be able to get credit up through next July, but after next July, their employer would no longer be eligible, and therefore their employment there would not be eligible for PSLF. So we want to make sure that everyone and anyone who is pursuing PSLF or who works for a qualifying employer certifies their employment as soon as possible. So that way, given all the delays it takes to process these forms, they can make sure those credits are in their account before any potential changes might happen. Right? The last thing I'd note too is going into next year especially, and if there is any news on public service loan forgiveness, okay, especially if it comes to potentially limiting certain employers' eligibility for the program, you can expect that as a result, millions of people are going to start submitting these applications to make sure that they get their credit certified before any changes take place, right? And that's when we start to see even more delays as far as processing goes. Typically right now, an employment certification form, depending upon how far back of employment period it goes, if it's a couple of months, so you're certifying, let's say, the last 6 months worth of employment, that gets turned around pretty quickly. But if you are submitting these for the first time and that employment, stretches back years, if not over a decade, that takes quite a while. They have to reach out to the servicer and basically request payment history, match that up with your employment history. That can take upwards of 2, 3, 4 months to process. So again, the sooner you can get these forms in, it will help inform your decision around what you might want to do repayment-wise. Okay, few final thoughts here. As always, Savi is on your side, monitoring every aspect of the entire student loan system, but especially when it comes to SAVE and PSLF and delays to PSLF. We work with the majority of PSLF employers out there in this country, so understanding every aspect of how this works from you, the borrower, to your HR and employers, and trying to protect their eligibility. This is sort of an important time for the whole ecosystem. And so we are monitoring every aspect of this situation. We will be sending out policy updates via email, as we usually do, and hosting regular webinars and town halls like these to ensure you all have the most recent information. And especially if anything breaks news-wise, again, you can count on us to be the one communicating that to you. But we're always advocating for borrowers and making sure that you have access to affordable repayment options, which is why going through the Savi Experience and account, our goal is to show you all of those options and help guide you towards the best one for your situation. There is no one-size-fits-all solution for every borrower. It's like sort of a fingerprint, right? Each borrower is slightly different, has different financial considerations, timelines, things like that. So the best way to prepare yourself right now is making sure that your Savi account is fully up to date, all the information, your loans are synced. And I would say if there was ever a time to utilize our application submission those premium plans, being able to get those ECFs signed and submitted with the click of a button, and having us monitor all of those, especially given what's going on with the backlogs, I would say it's probably now, especially if you are very close to that 120. I've been working with a few borrowers who they were submitting an ECF every month this summer to get to that 120, and lo and behold, they did, and they just got their loans forgiven. So to be clear, PSLF is still being processed and will continue to be processed, but right now it's sort of a strategic slog to try to figure out the best way, especially if you are there or nearly there, and we're enrolled in the SAVE plan, the best way to get there. Okay, we're going to run through a few quick FAQs. This should hopefully help bring things back to your Savi account and how you can take these next steps. So this one I think is always helpful. Where can I check the status of my federal student loans, right? That would be studentaid.gov. And this is also where you will check and be able to see the status of your PSLF certification, employment and qualifying payments, okay? Your servicer, like Mohila, Ed Financial, Advantage, that's where you are making monthly payments and managing those payments on a month-to-month basis. But your studentaid.gov account is going to be sort of the best place for you to see what the status of your loans is as far as what repayment plan am I in? Am I at risk of delinquency or default, right? It will show you that. And it will also be the place where all of your PSLF credits and certifications are tracked and reflected back to you, okay? So you'll be able to review all of your loans under the My Aid section, okay? And then you can view your loan breakdown to see the current status of each of them, all right? If you're not sure if you're in the SAVE plan or not, it will show you right there, okay? And then under My Activity, it will track and show you a PSLF, almost dashboard, if you will, where you'll be able to see what has been processed and up to what date your employment has been certified. How can I apply for programs through Savi, specifically income-driven repayment plans? And employment certification forms for public service loan forgiveness. So once you have entered in your information and you've seen your plan options page, right, where you're seeing what that income-driven repayment could look like, your PSLF eligibility, from there you click continue, and that's where you'll have access to the pre-filled income-driven repayment application to get that submitted if that's what you choose to do, or you can start a new ECF or complete your existing ECFs right from that Savi dashboard, as you can see here. And you can do it for as many employers as you need to, current and previous. As you see, this person has 3 employers that they are going to be processing ECFs through for their Savi account. How to apply for PSLF through Savi. So for existing users, okay, you can log into your Savi account by visiting that link or scanning the QR code. For new Savi users, check your email post-workshop. We're going to be sending you instructions on how to access your Savi account. But I just want to be clear, in order to process and send these employment certification forms through Savi, if that's what you would like to do and have us help you do that, you must have an active Essential or Pro membership for 2025. That is not part of the DIY plan. And just as a reminder, there are 3 different ways to use your Savi account. Obviously, it is always free to create and see your options. So you can enter in all your information, sync your loans, and we show you what specific income-driven repayment plan is best, what those other options are, and what your PSLF eligibility looks like. And then we provide you with instructions on how to submit those applications on your own, should you choose. Or by upgrading to Essential or Pro, you have the option for Savi to take on all of that administrative burden for you. We pre-fill, digitize, and submit everything from repayment to forgiveness on your behalf, monitor and track it. And the best part is that you get access to one-on-one expert support at any point in time, telephone, email, live chat, you name it, whatever your preferred method might be, with our support team. So just really quickly, I wanted to highlight a few elements of actually submitting an ECF with Savi. The first is you want to ensure all your current and previous employers are added in the Savi tool, and that would be in the employment section. Then you're going to navigate to your Savi dashboard and click Active Applications right here on the left, as you can see here, and then click Get Started to start a new ECF form. You'll see a list of all your PSLF eligible employers. You can choose which employer to create a form for. You'll need to complete these steps for each employer. Okay, so I can click Start ECF for United Way, Start ECF for Salvation Army. Now, if your employer works with Savi, the contact information will be pre-filled. You won't even be able to change or edit it. You'll see that it's completely pre-filled. If your employer is not working with Savi, you'll know they're not working with Savi because it'll prompt you to enter contact info for the HR official that will sign your form. And if you're not sure, you can simply click Contact Support and send a note to our support team, and they will be able to help you locate that information. After that, you're just going to confirm your personal information is correct, draw your signature to submit your application, and then you're done. And then at this point, Savi sends that application or each of your forms off to your employers for signature. So you'll see this sign right here, this notification, letting you know that your form has been submitted and now it's off to your employer. And then once your employer has signed off, you will receive an email letting you know that the form has been completed and submitted to the Department of Ed, which you see right here on the right. And then from there, you're able to track all of the various applications, whether, several different ECFs for different employers, income-driven repayment plan, all in one place. And zoomed in right here, you're able to see exactly where you are in the process. What might be delayed or expected processing time, what we might have submitted on your behalf or what we might still need from you in order to move forward, right? It really provides a level of transparency that I've personally found as a borrower to be non-existent elsewhere, especially when trying to access my servicer account or studentaid.gov. And then last but not least, if you run into issues at any point along the way, or you receive an email from studentaid.gov, federal student aid, that you're not quite sure what it means, if you need to do anything right, this is where having access to our experts is critical. Because I will tell you, borrowers who pursue this alone and submit these applications will go months without hearing anything from the Department of Ed. They'll check their account. It will say nothing. There'll be no update. They'll think, did they get my application? They'll resubmit it, right? Over and over. And there's no feedback from the servicer or Ed as to what the status of their applications or progress is. And that's really where borrowers, feel overwhelmed, anxiety ridden, right? This is it's not a stress-free process by any means. But knowing that if there is anything that happens that you're unsure, unclear about, you receive an email from your servicer, from the Department of Ed, what have you, something that you're confused by, you can reach out to our team at any point along the way. Our goal is to really make sure you get to that finish line. All right, so again, you can access your Savi account scanning that QR code. Otherwise, if you don't have a Savi account just yet, not to worry. We'll be following up after the session via email with instructions on how to get that started. All right, so we are going to wrap things up here, folks, right on the hour. Few sort of next steps here. Making sure you have access to your Savi account. Again, everyone will receive an email after this presentation with a recording of the workshop. And if you don't have a Savi account yet, don't worry, we'll make sure that you get one set up. And if you want to have Savi help make sure all of your various applications amidst all these backlogs are getting processed as they should, everything's being accounted for, and you are not unnecessarily delayed in that progress towards PSLF. Even if you want to strategize with one of our student loan experts as to whether you should stay on SAVE and pursue PSLF buyback, or whether you should switch into a different income-driven repayment plan. They can help you price out the options of what those payments might look like, and it can become clearer as to what's actually feasible. So this is really where we can help you, sort of guide into the next steps, take your hand, and help make that decision a little bit easier. So at this point, I am going to head over to our office hours. For those who requested the link to join us, if you have not yet, as a premium user, please feel free to upgrade. You're more than welcome to join me over on our Zoom office hours. I will be hanging around, very informal, come with your questions, sort of, very living room type feel. All borrowers welcome, but I will be there. This is a premium only office hours for those who are Essential or Pro. And I look forward to seeing as many of you over there as possible. That being said, I'm going to take a quick peek at our chat, and it looks like all right, we had a ton of questions come through. Just so everyone's aware, I mean, we had over, looks like over 300 questions, a little over 300 questions come through in just that hour. So if we didn't get to your question, which likely may have happened because we're only human and our amazing support team couldn't get to everyone, your options are you can reach out to our support team through your Savi account. Like I said, to like now might be the best time to upgrade more than ever. I would say the value of just making the right decision, knowing what's coming next year, but especially if you are anywhere near that 120 or suspect that you are, you don't want to mess around with these months. Let's get those forms in and certified properly. So, it's 100% money back guarantee. This is, I would say, the most critical time and juncture to make sure that your applications are not delayed in processing. You do not want to get lost in that mess. So if you do have a question that didn't get answered, like I said, you can direct that right to our customer support team. They were on here answering that Q&A as fast as they could live. But again, you can send that through your Savi account. Otherwise, everyone, I will see you on our next town hall. We appreciate everyone who stuck around and joined us here this evening. We hope it was helpful. We always appreciate the feedback. And I will keep the line open as we continue to supply those with premium with the Zoom link. But otherwise, thank you to everyone for attending, and I look forward to helping you soon. All right, there are still a few folks who are asking for the office hours link. Our team was just confirming memberships. So stay tuned with us, but we are going to hop on over to that office hours momentarily. If you did request a link in the Q&A, Dylan is working to get you that link. All right, let's see if I can help Dylan out here and share this link. If you do need to upgrade to Essential, you can do so by logging back into your Savi account. I'll put this link in the chat. You can log into your Savi account at buysavi.com. All right, you can upgrade from there. We will also be sending out that link. Anyone who upgrades after we've closed out the session, not to worry, we have a record of that. We'll be making sure that we send out that link. So again, thank you to everyone for joining us. If you didn't get your question answered or you can't stay on for the office hours, not to worry. Like I said, the best place to put those questions and get those answers is through your Savi account to our support team. So thanks again to everyone for coming out today. Thank you. Huge thank you to Dylan, who has been sticking around solo to help get each and every one of you answers to your questions and get you those links. I see so much appreciation for her in the Q&A. Absolutely. So I'm going to head over to our office hours, and I hope everyone has a great rest of the evening. Thanks, everyone.